First of all, I'd like to thank you for taking some time off to attend this webinar. My name is Marcus Goy, Chief Executive of Orient Futures International, Singapore. Orient Futures Singapore was incorporated in September 2018. It's a capital market license holder issued by Monetary Authority of Singapore to deal in exchange-traded derivative, OTC derivative, and margin FX, holding full clearing membership in Singapore Exchange and Asia Pacific Exchange. To know us better, please visit our official website and follow us on LinkedIn, Facebook, or contact us directly to understand what product and services we offer. Our philosophy is to provide quality services to our clients and always improving clients' experiences, leveraging on advanced technology and streamlined processes. Orient Futures Singapore is an overseas intermediary of Dalian Commodity Exchange, Zhengzhou Commodity Exchange, and Shanghai International Energy Exchange, which we can offer this internationalized product to our global clients. When global clients participate in this internationalized product with us, they have direct access in trading, clearing, and settlement. As of today, there are a total 7 futures products and 2 option products being internationalized. Today's webinar, we have invited Gloris Wu from Shanghai International Energy Exchange. She will summarize key points and trading performance of INE's product, including crude oil, low sulfur fuel oil, TSR20 rubber, bonded copper, and crude oil options, and introducing INE as well as the new product to be launched in near future. Let me hand over to Gloris Wu and hope you will have a better knowledge of INE and its product offering after this webinar. Thank you.
Hi everyone, this is Gloris from Shanghai International Energy Exchange. I'm based in Singapore currently and responsible for business development. I'm very glad to have this opportunity to introduce INE products for Orient Futures and the value clients. I'll show my slides now. So in my presentation, I will focus on 4 major issues: the general introduction of INE, the strong point and trading performance of each product, the future plan, and the website guidelines. So I will start about the general background of INE first. So INE is short for Shanghai International Energy Exchange, and SHFE is short for Shanghai Futures Exchange. INE is the subsidiary company of SHFE. We list our domestic products on SHFE platform and list all international products on INE platform. So far, INE have 5 international products. With the listed date on the chart, the first international commodity futures product of INE, as well as of China, is the crude oil futures, which was launched on March 2018. And then in 2019, INE launched TSR20 futures, the rubber futures. 1 year later, INE listed low sulfur fuel oil futures and the bonded copper futures. Then INE launched crude oil options in 2021. So far, 75 overseas intermediaries had registered on the INE, with overseas clients coming from more than 20 countries and regions. So where are we among the global exchanges? According to the FIA statistics in 2020, the top 3 global commodity exchanges by trading volume are all Chinese exchanges. The trading volume of SHFE and INE together ranks number 2. So compared with other global exchanges that had negative year-on-year growth, Chinese futures exchanges demonstrated a huge development potential, with a rapid growth of 40 to 60% year-on-year. Before talking about the details of each product, I would like to share the design framework of INE futures contract. So far, 4 INE futures contracts will follow the 4 rules. The first one is that all contracts are denominated in RMB, while US dollar and other foreign exchanges can be used as trading margin. The second one is that the trading price is net pricing. Net price trading means that the trading price doesn't include any duty or value-added tax, which is different from the other domestic future prices and makes it easier to be compared with other international prices net of any taxes. The third rule is bonded physical delivery. Bonded delivery means physical delivery shall be carried out based on bonded storage facilities. Last rule is that INE products are open both to on-shown and off-shown participants. So for end users as well as brokers, you can trade the products directly. Okay, next I will introduce the product one by one, and I will start with the crude oil futures, the most mature contract of INE. The first strong point is that INE's crude oil futures is the third most traded oil benchmark in the world. According to the FAA statistic in 2020, INE crude oil ranks 16 among all energy futures and options in terms of the trading volume. If we pick out only crude oil futures, INE crude oil futures has the third trading volume, just behind Brent oil and WTI oil, and better than Oman futures. INE sour crude is an important supplement to crude oil benchmark. So ICE Brent is widely used in European region, NYMEX is widely used in North American region, and INE sour crude targets to form a benchmark price reflecting the supply-demand situation in China and the Asian Pacific region. As the benchmark price, INE sour crude price has a high correlation with the price of WTI, Brent, and Oman, and the INE price can reflect the regional market trend. The second strong point is that the increasing trading volume. So in 2020, China's demand for crude oil continued to grow despite the impact from the COVID-19 pandemic. And starting from the beginning of 2021 to the end of October, the average daily trading volume of sour crude reached around 171 million barrels. The increasing trading volume and turnover represents the market's recognition that crude oil futures on Shanghai's market have been broadly recognized, and more participants use those futures to hedge, which will improve the structure of the crude futures market. In order to meet the need of the market, starting from 2020, INE has added several designated oil terminals. So far, INE has 16 designated oil terminals. Total storage capacity has increased from 3.55 million metric tons to 12.12 million metric tons. The third strong point is that INE listed TAS in 2020. TAS, short for Trade at Settlements, is an order type that allows a trader to buy or sell crude oil futures contract during specific trading hours at the settlement price. So this investor used to place orders frequently to simulate the settlement price, which is difficult to execute and also inefficient for hedging. So the TAS orders enable investors to trade at or near the settlement price during specific trading hours, which will greatly reduce the uncertainty when hedging. The fourth strong point is rapid growth of crude oil options. From June to October in 2021, the trading volume ratio of crude oil options averaged at 6.63% and reached up to 12.86%. The open interest ratio averaged at 18.95% and reached up to 27.78%. As the first international options, it takes time for this new contract to attract significant liquidity and participation globally, but it's a big step in the right direction. The second energy futures is low sulfur fuel oil futures contract. Let's take a look at the trading performance first. From January to October in 2021, the total trading volume of low sulfur fuel oil futures is 14.9 million lots, traded for around 494 billion RMB. Price correlation between this contract and low sulfur fuel oil spot and INE crude oil futures is 0.96 and 0.98. So for low sulfur fuel oil, there are three strong points that makes it different from the other products. First is the overseas take delivery mode. It's a new design under INE's group delivery framework. Generally speaking, it allows buyers to take goods overseas. For example, if I am a buyer and I can pick up my goods in Shanghai warehouse, meanwhile I hope to take goods physically in Singapore, then I can negotiate with the authorized delivered factory, PetroChina Zhejiang, to exchange the low sulfur fuel oil and pick it up in Singapore with the premium 30 RMB per ton. This delivery mode represents the opening up of China's futures market. In the future, we may expand the practice to other contracts, or it can be the first step of regular overseas delivery. The second strong point is China's Zhoushan low sulfur fuel oil bonded bunker price. It's a cooperation business between INE and Zhejiang Mercantile Exchange. So Zhejiang Mercantile Exchange will provide a spot price of the bunker fuel based on the daily INE low sulfur fuel oil futures settlement price with a premium or discount. Before this business, Chinese bunker fuel market usually trade based on the MOPS price provided by plants. So this price reflects the better about Chinese future oil market and helps the price discovery function. The third strong point is that INE releases means of settlement price for low sulfur fuel oil futures. The eligible contract of the most price will be the second, third, and fourth nearby low sulfur fuel oil futures contracts. It meets the needs of market participants for hedging and trading, and is also the first step before listing the monthly average settlement price futures contract later. Next product is TSR20, the rubber futures. From January to October in 2021, the total trading volume of TSR20 futures is 6.61 million metric tons. The cumulative delivery volume is around 67,000 metric tons. Most participants of TSR20 are institutional investors. In the first half year of 2021, the open interest percentage of institutional investors is nearly 50%, which has a year-on-year increase of 40%. Most overseas clients are from Singapore, Thailand, and Hong Kong, China. The strong point of TSR20 is that it has the largest daily trading volume. From January 2019, which is the listed month of INE TSR20, to October 2021, the daily trading volume of TSR20 futures ranked first, compared with Singapore Exchange and Japan Exchange Group, and the daily open interest ranked the second. Last product is the bonded Cooper. Sometimes we also call it International Cooper. It is because we have two Cooper futures. The first one is the domestic contract listed on Shelfie platform in 1993, and the second one is the international contract listed on INE platform in 2020. The domestic Cooper contract is one of the most mature futures products in China. The trading volume in 2020 reached number 2 in worldwide, and now has become the benchmark of domestic spot price. Bonded Cooper contract, on the other hand, is open directly to overseas investors. So the price of two contracts reflect the supply and demand onshore and offshore separately. The second strong point is that the bonded Cooper futures price has a high correlation with LME price and mild steel spot price. The price correlation are all about 0.01 all about 0.95. Let's have a look at the trading performance. From the listed date to October 2021, the accumulated trading volume is 1.13 million lots, traded for 1.22 trillion RMB. Okay, so after all this information about INE contracts, I will quickly go through the future plan. First, of course, is the new futures contract we plan to launch. They are freight index and LNG futures. Freight index will be the first cash settlements commodity contracts in China. It's a container index, and the shipping lanes will be from Shanghai to Europe. LNG futures is a key alternative product during energy transition process, and INE will adopt low carbon and ESG in futures market to meet the demand from China's economic transformation. For delivery mode, INE is developing the business to certificate overseas designated warehouse, which will allow goods to be delivered overseas. And last, for the trading mode, INE will apply task orders on TSR20 and bonded Cooper contract. Last part is the website guidelines. So you could find all the INE rules on our official website, such as the trading rules, clearing rules, and delivery rules. Compared with the other international exchanges, INE's Chinese clearing rules and delivery rules are very different. So as an investor, you may pay more attention to these two parts. And you could also find all the trading data on the official website. Here's an example to find the current trading margin on the website. So you click the market data button on the home page. Then you can see all the current margin and daily limit of each contract on specific dates. Besides, you can also find the weekly inventory data, the monthly market data, and so on the website. So last, I made a conclusion about the strong point of each product here, and I'm not going to repeat it again. And at last, I put my contact information here. If you have any question about the contract or any rules, feel free to drop me an email. That's all my presentation for today. Thank you.